have you with us. Thanks for tuning in to another edition of Investor's Guide. I'm Avni Raja, and on this show, we guide you and help you on how you can make your money work for you. Now, in today's edition, we are going to be talking about what are called as sectoral funds. They're also known as thematic funds. It is one category of mutual funds that's a little complex in the kind of risks that one has to perhaps bear if one chooses to invest into this category. So there are a lot of things that one needs to be aware about before deciding to put money into this category of sectoral or thematic funds. Now, to understand what this category is all about, joining me is Feroze Azeez of Avni Raja Wealth Management. Feroze, thank you for joining us, and the topic today is sectoral funds or thematic funds, and this is, while it's an interesting category, I think the first thing to highlight here that this is not perhaps for novice investors. This is for investors who have been doing it for a while and who understand how the stock market functions and how this category actually works.
Yes, Avni, you're right. This category, as the name suggests, sectorial or thematic, is a little higher risk kind of category. So a beginner could stay away from it, and somebody who has actually gone through the learning curve of investing for a few years may want to venture into it. So a sector fund or a thematic fund, again, as the name indicates, sector fund invests all the money collected. The fund manager collects all the money and invests all of it in one specific sector or a theme in which there could be a few sectors, 2, 3, 4 sectors. So to give you an example, if you're looking at a pharmaceutical sector fund or a healthcare fund, as they are also called, the companies which will be chosen by the fund manager to invest all the accumulated money across thousands of investors is all of them are going to be in the healthcare sector, pharmaceutical company. So that's why it's called a sector fund. If I gave you an example of a thematic fund, could be an infrastructure fund. Infrastructure as a theme might encompass cement, could be construction, could be the L&Ts of the world. So a thematic fund is a little broader than a sector fund, but both these categories have a more pointed, more focused approach where the fund manager invests in very similar businesses, not diverse businesses.
All right. So, Feroze, like you pointed out, this is the kind of category where it's all focused into one particular sector. And as a result, one of the important things for investors to also understand is that usually with equity investments, the recommendation is always to hold it for the long term, maybe 5 years, 7 years, even more. But when it comes to this category, there is no fixed sort of recommendation or time horizon that one should go with, because it depends on the business cycle of that particular sector. So the timing for entering into a fund in a particular category and exiting a fund is also extremely important. If you can just reiterate that a bit.
Yes, Avni, I think sector funds are not a very long-termish bet, because if you look at investing for 10 years in a sector fund, then you would be actually getting a return equal to the rest of them, rest of the safer categories, and you would have taken more risk to get similar returns. So sector funds, the investor needs to be very agile, very vigilant, also be conscious of when he or she wishes to exit, because sectors don't do continuously well for long periods of time. They do performances in pockets. Now, for example, 3 years back, I'd recommended healthcare. For 1 year after I had recommended, it did nothing, and then made up for all the lost time in the last 2 years and gave stupendous returns. So point is, now would be the time to probably quit a healthcare sector. If a person doesn't do that, then holds on for the subsequent 5 years, he or she may not get significantly better returns than the rest of the categories. So exit is very important, because sectors don't unilaterally move in one direction forever. So you will have to be far more vigilant, and that's why, like you rightly said, Avni, this is not meant for those who are completely hands-off and new investors.
Right. So important to highlight there, Feroze, like you mentioned, this is largely for seasoned investors because the returns, in fact, can be inconsistent. And the other part, of course, is the expense ratio, the cost of this, investing in sectoral funds, which is about 2.4% at the moment. So this is also a little bit on the higher side because a fund manager's role would also be extremely important here. His or her expertise would also be important.
Yes, Avni, there are two reasons for this expense ratio to be higher. Largely, the expense ratio is higher than the rest of the diversified schemes, which can have 1.8 to 1.9%. Here, you're paying 0.5% per annum more because the sizes of the funds are smaller. SEBI, as a regulator, has told fund managers to charge lesser and lesser as the size of the fund goes up. Since sector funds are going to be smaller in size by nature, so the fund manager has the flexibility to charge more, and the fund manager capitalizes on that flexibility given and charges that 0.5% more. If you go to a diversified fund, you might have 50,000 crores, but sector funds would have 3 to 5,000 crores at maximum. So the potential for the fund manager to charge you more is high, and that card is being used by the fund manager to capitalize on the profitability which they can create.
Okay, so let's assume that we're talking about a seasoned investor who is looking at investing in sectoral funds. How should one sort of approach this category in terms of how much should be allocated? How should one decide which sector to sort of go and invest in at the moment?
I think, Avni, if you're investing in a sector fund, firstly, you have to create a core portion of the mutual fund portfolio and a 10 to 15% tactical allocation to make your portfolio more interesting and little icing on the cake kind of approach. 10 to 15% could be looked at for sure. But the second point which I would want to make, when a person actually is looking at sector funds, he needs to buy those sectors which are not the flavor of the day. You will have to buy sectors which have been left out in the recent rally. Like today, healthcare sector would have lived its course, but a banking still has headroom because it has not reached its peak. So the most important tip to a sector fund investor is don't buy the sector which everyone else is buying. Buy the sector which today is not in flavor, which will catch up with the rest of them, and that's when you will not be chasing your own tail. You will be ahead of the curve. So don't go with the herd mentality when it comes to sector selection or sector fund selection, to be more.
Right. And Feroze, finally, if there are investors who are sort of looking to educate themselves, learn about this category, if they want to start investing in sectoral funds, what is the kind of research it would require? How should they go about doing that?
I think there are about 8-10 different themes or sectors which are possible. Choose 3 to 4. A person who wants to research should not open the entire Pandora's box. Make a choice of 3-4. Could be the FMCG, banking, healthcare, automobile. These could be the core sectors which are represented very well in Nifty. So choose these 4, ignore the rest of them, and then analyze which one has not done very well over the last 2-3 years, and then do the second leg of homework of what its potential over the next 2-3-4 years could be, and buy that sector which has not done too well. And lastly, always have a profit target when you buy a sector fund. A sector fund is not a fund which you will own perpetually. Have a profit target. Once you attain that profit, if it is in a year, great. If it takes 3 years, let it be invested for 3 years, but you should always have a target-based approach rather than a perpetual long-term investing when it comes to this head.
All right, we'll leave it there on that note. Feroze, thank you so much for joining us on this edition of Investor's Guide. We'll be back with another episode. Until then, we hope this has helped you understand the pros and cons, the risks especially associated with sectoral funds. Thanks for watching.